And good afternoon. Welcome into Market Talk for Monday, February 1st. Hard to believe we've already put a month down in 2021, but we are here. We are in the month of February. Good afternoon once again. I'm your host, Jesse Allen. Great to have you with us. MarketTalkAg.com. That is our home on the web. MarketTalkAg.com. You can find us as well. Facebook, Twitter, Instagram. It's all at Market Talk Ag. All your favorite podcast sources, streaming sources, including Spotify, Apple Podcasts, and more. Our great radio affiliates across the country, including the Alpha Media Farm Network stations like KLGR, in Redwood Falls, Minnesota, KWMT in Fort Dodge, Iowa, as well as WIBW in Topeka, Kansas. A lot of great partners, our radio affiliates with Market Talk. We appreciate them being part of the family. Well, normally on Mondays, we have our good friend Brian Doherty from Total Farm Marketing by Stewart-Peterson jumping on with us. But Brian is out today and kind enough to connect us with one of his coworkers. So we get a new face and new voice on the show today. Amberlee Bratcher with Total Farm Marketing by Stewart-Peterson. Amberlee, how are you today?
I'm good. Thanks for having me, Jesse. I'll do a quick plug for Brian. If you really want to see his glowing face, he's at the Iowa Power Farm Show. So that's why he's not here today. So pop by. Tell him I sent you. I get $10 for everyone. No.
There we go. I like it. Shameless plug. That's perfect. That's great. Well, we wish Brian all the best, and I appreciate you jumping on the show here today. It's always fun to talk with someone new and get their perspective on the market trade. And, Amberlee, we move into the month of February. Overall today, it was looking like it was going to be a down day. It seemed like a lot of technical selling in this market. And then right at the close, we got a little bit of a rally with corn and new crop beans finished higher. But overall, what are your thoughts just how this market traded on Monday?
Yeah, we typically tell people it really doesn't matter what happens throughout the day. What counts is at 1:20 in the afternoon. And today was a prime example of that. It looked like we were off to a disgusting day for the first day of the month. But yeah, there at the close, things kind of bounced back, which, you typically see on non-fundamental shifts in the market. So it's a nice surprise, but it's also not a glaringly shocking one either. The market that had to trade its fundamentals and didn't get a redemption at the close, of course, was the wheat market. And although that is still an incredibly good price for February 1st for wheat, it certainly didn't. It's kind of been the follow the corn trend participant the last few weeks, and it certainly didn't get that chance today. It's more news out of Russia. If you're a Russian farmer, every morning you wake up and your country is scaring you more than it did the day before. And that was the talk over the weekend, is that now not only are they going to implement this export tax starting in March, but they were thinking of doing this in July, and now they're thinking of backing it up to June to make those export taxes even higher. Again, they're still trying to grapple with their own food costs over there, and nothing they seem to be doing is working. And so they just keep ratcheting it up, hoping that they can find the solution to stabilize their own problem. But of course, if you're trying to export wheat, that's your bread and butter as well. So they just continue to keep pushing things to market as fast as they can so that they're not stuck paying those, the exports are just expected, of course, just to slow down, and they'll be stuck with the current grain they have on hand. So you just saw more of that hitting the market globally, no matter what wheat market you looked at for the day.
Sure. And, we saw some fun selling, and I think just everyone kind of getting a little selling going today. I was surprised at the close, though. We'll stay on wheat here for a second. I'm surprised at the separation between wheat and corn. Typically, they like to move together, and it seemed like, corn started to rally back. But this wheat market, once we get to that export tax point here, I believe it's the 15th of this month, and you mentioned we'll probably see exports slow down. And you mentioned, too, this is a good price for wheat right now. Where do you think this wheat market is going to go here as we're moving forward? And I know we have USDA reports next week as well.
Sure. Our wheat, unlike the reason that I think it falls apart on days like today, is that although it can follow the trend of corn, it is not in corn's boat. Corn is in a demand market, and China is pulling up to the table and eating mass amounts of it. You do not see that happening in the wheat market. And so although it gets to kind of ride the train, it doesn't take much to derail it because it's just simply not in the same ballgame. And so I think that's why you see days like today. But then long term, you can't be bullish corn without being bullish wheat. I just don't see those two feed grains derailing. And so I think if you're still on board of China staying in this, and of course, we just keep making that ending stock number tighter and tighter on a balance sheet standpoint. If corn's going to go to, potentially $5 or higher, you can't sit back and say wheat's going to fall apart. So you can't, in my boat, I think it's hard to be friendly one and not friendly the other, regardless if wheat has any business. Challenging $7 really could be a moot point.
And that's something I think we'll be watching moving forward. And, talking this corn market as well, we saw a few export sales today, Japan, Mexico on that Daily Wire. Nothing to China. Finally, we took a break from Chinese corn purchases. And really, I guess I wasn't shocked that we didn't see anything to China today, but will I be surprised if we don't see something tomorrow, Wednesday, later this week? It just seems like you kind of alluded to it, that Chinese demand, it's just insatiable right now for corn, and it keeps tightening our ending stocks and our balance sheet here in the U.S. And, really looking at this market, it was nice to rally even with a slight close above unchanged today was nice after the way the market was looking.
Yeah, it was nice to see corn fight back on its own merit. Typically when we see those big days, and we even saw that some last week, we saw those big purchases from China, but we didn't watch corn go up 20 cents in a day either. And so the market, as frightening as it is in some ways, it goes to show you that the market, that price on the board is built with the expectation of that demand from China. Now, I don't think any of us saw last week. I mean, there's demand, and then there's the purchases that we saw on like last Thursday. Those were just astronomically large. But there's I tell people you need to be aware of that, and the fact that we can see those kind of purchases and then the market doesn't just implode to the top. It goes to show you that we're expecting that's built in there, that demand clause, and it doesn't seem to be going anywhere. That is for certain. But it is really impressive. There's no other word for it. And it's shocking. I mean, when you see those, when I'm sitting here and I see them come across, the daily export sales, and you see, over 1 million metric tons of corn sent out in one day, you go, oh, like you almost wonder if you read it wrong at first. And so it's respectable, but then, we also have to keep an eye on it as to how it ebbs and flows moving forward. But I mean, the good news is for our market, in the short term, it doesn't look like it's going anywhere anytime soon. So I would be surprised if they stay quiet all week. But after last week, it's almost hard to say, well, I can't believe we didn't see anything today, because what we saw last week was pretty impressive.
Sure. Well, and with the Chinese, I think we all know that, sometimes, they'll do something one week and then the next week they'll disappear. It's hard to know what they are thinking over there in China. Now, with corn producers, I've heard questions from a lot of guys and gals here the last week or so, if they're sitting on some old crop corn or they're starting to think about new crop sales. What are you telling some of the producers you work with right now with this corn market, where it's at, looking at basis levels? They've weakened a little bit, but they're still really good in a lot of parts of the country. What are you telling them? Are you saying, hey, make some sales if it makes sense for you right now, move some of this old crop corn or make some new crop sales? You telling them to wait? What are some of your thoughts? What's some advice you'd have for them?
What I tell anybody is my advice right now is much easier said than done. Because what you need to do and what you can feel like you can do right now are two totally different things. For new crop corn to be at $4.50 and soybeans to be at $11.50, if you've virtually made no sales, it's very easy to go, if it's your worst sale, that's great, but the truth is that's coming off of the foothills, and that's how we are in the environment we are, is you have producers that you have to acknowledge, in the last 6 years have had years that they're making break even, if not even, sales throughout the year. And so when you say, well, you've got this great sale, why not make it? Well, because within your own head, you think, well, in the law of averages, if I had these at break even and these at just a little over, I'm still not coming out where I want to be from a financial standpoint. So I understand that, but it doesn't negate what I said to begin with. These are good levels and these are sound levels, and they're above pretty much anybody's break even. And, the goal is to make sure that you're still producing next year. And then let's talk profit, in options or, on the board. I think there's ways that you can be bullish and still have some sales on the balance sheet and feel good about it. And then if it falls apart, I tell people I don't know where this fizzles out. I personally, I typically am not bullish, but I'm also a realist. And I look at this and say, I don't know how I can say beans price ration where they are. And that's what we still need to do. And we did that in 2012. And, we pushed those things almost to $18. But within 90 days, we were, $4 lower. And so we know that it's a great train, but then once it fizzles, and at that point, you're trying to just catch that falling knife. And that's so hard too, from a mentality. And then you call people like Brian or myself and say, well, what do I do? Or where's this going? And at that point, we don't know. We don't know any more than we know right now of where does this top out. And so I think there's ways to make sound, smart decisions that still allow you to profit on the way up, but still protect, that hedge that we all desperately need. We have to have that line in the sand where we say, that's my protection level that, keeps you safe from a checks and balances standpoint.
No, that's great advice. I would definitely agree with you on that. And I think I always say on the show, it comes down to your balance sheet, your operation, making the best decision for you. Briefly on soybeans here, Amberlee, we did see a meal sale today to the Philippines. Otherwise, export wire was pretty quiet. South America, the weather front there, it's still kind of a mixed bag, maybe turning a little bearish in Brazil. But I know we got the trucker strike and everything still going on. But it seems like beans, South American crop, needs to get to ports to start taking advantage of some of these price levels that we're getting. But overall, looking at this bean market today, we rallied back in the new crop side, back in old crop too. What are your thoughts on soybeans here as we head into the month of February, and especially with that USDA report coming up next week? Are we going to tighten this balance sheet up even more, or are we going to start price rationing?
So I'll start with the first thought. So my thought on the South American crop is that we need to be respectful of it. I think the same way that we sometimes get ahead of ourselves and worry that our crop is going to come up short. South America has been putting the kind of work into their crops the same way, we have. They've come a long way in the last, even just 10 years. And so I guess I'm still willing to agree with the USDA number. More and more people are agreeing with that, but I always like to start too big. And then if we trim it down, fantastic. But let's work with that, 133 million bushel reality. And that's not a short crop. That's a record crop for them. And so my worry is, of course, short term, they are behind. It's not significant, but the rains are keeping them from, getting their harvest the way they want to right now. I think the trucker strike is to be respected. That is going to definitely slow things down. So we may see a short term bounce, depending how that goes. I don't know how long that'll last, but they're very serious about it. It's not something that they're playing around with down there. And so, but with that said, I think they have a pretty big, stick to swing in that. And I think South America will be quick to negotiate with them. They're not going to want to delay those shipments getting to port either. So I think that's a situation worth watching. I don't know the implications of it. It'll purely just be how long does it last? If it lasts any amount of time, then that'll certainly start to impact things longer term. But then, here on our side, we do have that report coming out. I don't know how we don't continue to trim that number. I think it is going to get smaller. And, if we start seeing, I know the market's already calling for, 100 million bushels or less. I don't know that we'll be down that far, but if we do start to trickle down there, we are going to have to do something. I mean, we can't just run out of soybeans. I don't think any of us want to be in the position Brazil was in, South America was in just not too long ago and looking to us for soybeans. So we certainly don't want to be on that inverse relationship. And like I said, I don't know how we get there at 1350 and 1150 new crop. I just don't see those prices creating the message that we need to within the market.
Well, I think overall, as our producers, if they're doing any marketing with their grains here, old crop still or new crop, I think this is a time, and I'll ask your opinion on this before we move to livestock. I think this is just a time and a market climate where they just have to stay vigilant and work with their advisor to make sure they're on top of what's going to be best for their operation.
Absolutely. I mean, first of all, if you have old crop in soybeans, you're both fortunate, and you're you probably had a situation not the norm. I mean, for many of us, and I heard this back in 2012 too. It's a pain point. It's a pain point when you sell and then things don't. I mean, you can always settle with it going a little bit higher, but especially in that soybean market, I mean, we don't typically rally into harvest. I mean, they're called harvest lows for a reason. And so that was hard for people to watch. But, on the flip side of that, it also was not an unsound decision. I mean, at harvest, we were in an inverted market. It made no sense to pay for storage to potentially sell your grain for less. And so those were not stupid decisions. And it's important producers remind themselves of that. It's easy to have that regret and kick yourself for being, quote, a poor marketer. But the truth is, you weren't a poor marketer. We just went into an unprecedented market exchange. And so if you still have those, I would encourage probably letting go at this point, just because you've held on and you can get quite the reward for whatever that reason is. And then there's so many other ways to still be a market participant other than holding that cash value. And so that's absolutely, and that comes down to risk tolerance and what works best. And there's all kinds of options from both at your elevator to your broker. There's so many ways to still manage that, but still not. I always feel like the riskiest position that anybody can do is to do nothing. There's no more volatile market than just watching the cash price move around penny for penny all day. So to have some cash tool to manage that, I feel like is your best bet.
Great advice there, Amberlee. Let's talk livestock here briefly. That feeder cattle market today got some good support with the sag in grain prices and in corn prices. And just looking here today, we were up modestly in that feeder cattle market. And, looking at feeder live cattle in general, obviously this has been the story for the last couple of months is COVID and the demand issues and everything else. But, we look at this market and it seems like the support is hanging tough and hanging in there. Anything you're seeing in that cattle market as we move into February that we need to keep an eye on?
Gosh, that market is it can swing dollars and still be range bound. It seems like no matter where you're in, if you can just hold tight long enough, you could be on the right side of it. If you could just stomach the price swings back and forth. And that's because it's exactly what it is. It's a market that is really stuck in the middle of this pandemic trade. And the fact that you have the vaccines coming out and you have all this hope being built into the market. And, you still see the stock market holding in there around that. But then you look at the reality. I mean, I'm still in my basement. And so we start to say, where's the reality of this situation? Are we going to return back to normal? Is demand going to return in the summer? Are we going to start to be able to open up our restaurants? Are the schools going to be able to be fully functional by the spring or at least the fall? And those are huge questions that are going to have a huge impact on that market. And the livestock guys know it, and corn going to potentially going to $5 is of no help. But with that said, as you said, it is still there. And that is because that hope for that demand market it's still a very real reality. It's just which side of the coin do we see come out? And sadly, the only thing that's going to be able to really show us that is time. We aren't going to know any of this until we can see, there's so many things. And then there's this whole variant thing. And is that going to be a thing with the vaccines? And is that going to, are we going to get them in time? There's just still so many questions lingering out there that keep that market in limbo. But, the box beef prices continue to go up. Cash for fats is nice and up over $3 in last week. So the market is trying to be as optimistic with the information that they have. But I think you just have to be cautious. And I don't think you would talk to any livestock guy that knows anything about what he does for a living that he's not. You can enjoy the move and know that at any moment it could be whipped out. And if they didn't figure that out back in March, trust me, nothing gave them a starker reality check on that than 6 months ago or more.
Sure. Very, very true. Well, in that cattle market, you mentioned the cash trade, a couple bucks higher. I'll be curious to see if we can hold those levels moving into this week and hopefully get some feedlot trade earlier in the week versus last week. It was pretty much pushed all to Thursday and Friday.
Right.
On the hog side, pork cutout value still strong there. This hog market, I think there's still plenty of optimism with hogs as well, even though, again, it's kind of the same story as cattle with COVID and demand issues. But on the hog side, anything you're seeing there that we need to watch out for?
I'm probably less friendly hogs, and unfortunately, I'm sorry for hog producers. I know I'm not the only one telling them that. But there's just there's less things to be exciting thereof. But, I think for them, unlike so much the beef market, China still is a big contender one way or another for them. We keep hearing about, I still have my doubts, but if you believe that they've rebuilt their herds to 90% capacity, that is wildly impressive. But of course, their corn price compared to ours, they're going to continue to buy corn for feed purposes because they're going to, and right now they need to import our hogs because it's still cheaper than, trying to do their own thing, still trying to recover from, their swine flu problem. So I think as long as the export sheets hang in there, you can see support hang in there for the hog market for now. I just think if we start to see China get less codependent on us, that's kind of their bread and butter right now. And we've seen that happen, but they're still in there. They're our number 2 on the export sheet even right now. So it's again, and if the livestock market stays strong, although those are not necessarily codependent, they tend to sometimes travel together too, just as livestock buddies. So I guess if cattle stays well supported, maybe that'll throw a bone to the hog market too. But yeah, I think you just have to be smart and hedge your rallies and, pay attention to that market because it just doesn't have as much strength from what I can see right now, unless something else moves in on it that we just don't see on the horizon for that market right now.
Sure. Well, Amberlee, great insight here today. Any other final thoughts you have? We didn't really touch on the outside markets or anything, but I know the stock market was really strong today. We saw some money move back into gold and silver as well, but I don't know how much that really influenced us here today necessarily. But that or any other final thoughts you have?
It doesn't. I think what's going on with this whole GameStop Reddit thing is something we should, obviously they're not playing in the corn market.
Yeah.
And I don't know that I look for them to, but it's worth paying attention to. And it's worth, you can get into the politics of whether you think it's a good idea or a bad idea. As a market participant person managing risk, I think it's a horrible idea, but I totally get it. I get the side of it. But we just have to ask ourselves, like anything, and that can absolutely affect our stock market. And if that continues to be a trend and that inflates, the bigger a balloon gets, the bigger impact it has when it blows up. And so if it's short-lived and they make a point, then I think, we have less to worry about as from an outside market bleeding into our market standpoint. But we just saw this year, the outside markets can do all kinds of damage to us that have nothing to do with us as far as grain producers go. So to turn a blind eye and say it doesn't really matter to us, it doesn't today. I think it's worth just everybody kind of maybe turn in on the news for about 5 minutes to see how it's going, because I think it's just worth paying attention to, if that makes sense.
Yeah, part of me wishes I'd have known about this and bought a little bit of that GameStop stock.
That's called insider trading, Jesse.
The sensible part of me, though, is with you would be like, well, if I'm looking at this, I'm not going to put any money into this because the risk is just huge. But
correct.
That's neither here nor
right.
Amberlee, I appreciate it today. This has been great. And if folks want to reach out to you and the team at Total Farm Marketing for a little market insight and advice, I know you can go online to your website, totalfarmmarketing.com, or they can reach out to you with a call or an email, can't they?
They absolutely can. And we contacted all myriads of ways, but we are still phone people. So 1-800-334-9779. There's always somebody on the other end till 4:30 to talk to you, no matter what you need. So it's our best way.
Awesome. Well, Amberlee, I appreciate the time. Thank you for joining us today, and we'll have to have you back on again in the future. We appreciate it.
Great. Thanks so much, Jesse.
Amberlee Bratcher with Total Farm Marketing by Stewart-Peterson, our guest today here on Market Talk. Find us online, markettalkag.com. This has been the Monday, February 1st edition of Market Talk. I'm your host, Jesse Allen. Have a great afternoon.